and Jess de los Santos were half an
We're half an hour into the
hour.
trading day, but first, let's kick off with our top story. The Development Budget Coordination Committee, or the DBCC, warns that local government units may face financial stress that's amid declining tax collections due to the health crisis. The DBCC says the collection target of LGUs for 2020 have been slashed by 44% to nearly 172 billion pesos due to the impact of COVID-19. The committee says the crisis has caused sudden economic shock, and LGUs are likely to bear the brunt as they are at the front line of the pandemic's response and mitigation efforts. Fiscal stress is the gap between projected revenues and expenses. The DBCC warns that if a new wave of infections takes place, LGUs would need another 115 billion pesos in quarterly funding requirements, and another round of budget realignment would be needed. It says the impact on local tax revenues will become more definite in 2021, since next year's assessment will be based on this year's weak collections and reduced capacity of taxpayers hit by the economic downturn. The DBCC also flagged the conservative borrowings of LGUs, which could have been utilized to fund their projects. The total outstanding balance of LGU borrowings stand at 108 billion pesos, just 0.58% of the nominal GDP.
All right, investors are taking a quick break from the COVID-19 numbers and looking into an even bigger figure, more than $2 trillion worth of suspicious transactions. Dan, what's going on here and how is this affecting early trades?
Okay, Jess, so this was the big story yesterday, not just here locally, but basically abroad and all over the world. And as you mentioned, banks will definitely be in the spotlight after global lenders stumbled on a report about what you mentioned, suspicious worldwide transactions. So what's going on here? Basically, there's a new investigation by the International Consortium of Investigative Journalists. They said that some big banks kept profiting from powerful and dangerous players in the past 20 years, even after the US had imposed penalties. So this was actually leaked by BuzzFeed and also other media reports. They were leaked based on suspicious activity reports, as called SARS, which are reports that are filed by banks and other financial firms in the US with the Treasury's Financial Crimes Enforcement Network, so FinCEN. So this is called the FinCEN leak, so to speak, informally. So there are more than 2,100 suspicious activity reports, which of course in themselves are just reports, no? So they're not necessarily proof that anything wrong happened. These 2,100 SARS were obtained by BuzzFeed News and then shared with this international consortium of investigative journalists and other media organizations. So what were in the files? Information about more than $2 trillion worth of transactions in the past 2 decades, flagged by compliance departments of financial institutions as suspicious. The worst part is, Jess, that the ICIJ reported that these leaked documents were just a small fraction of all the reports that were filed with FinCEN. What happened here? HSBC shares fell to the lowest since 1995. They were one of the top banks that seem to have been implicated in this scandal. I'm just going to be opening Asia Pacific shares for you here so you can see how that is trading. It seems to be a sea of red since yesterday. So HSBC in Hong Kong fell by as much as 4.4%. You've also got Standard Chartered Bank's Hong Kong shares also falling. But they have released statements. So HSBC said that they have embarked on a multi-year journey to overhaul their ability to combat financial crime across more than 60 jurisdictions. Stanchart has also released a statement saying they take their responsibility to fight financial crime extremely seriously and have invested in their compliance programs. Nevertheless, you see Asia trading mainly in the red because Japan, which is of course in the green, is closed still on holidays. But you can see Hang Seng, which has these two big banks, down by 4%, 0.4%. Over in Shanghai and Shenzhen as well, not necessarily enjoying gains there. So a lot of pain being felt here, dragged down by our banks. The dollar also rose the most in 3 months. As I mentioned, Japan is also shut for a holiday. Let's take a quick peek at our own local index, of course, the PSEI. You can see that we are down by more than 1% in Tuesday's trade. And that's after we had actually finally inched up yesterday, even if that was less than a percent. But we did close at 5909. We're back to 5800 levels. So there's still tepid trades going on here. Turnovers were very weak. That was just at 4.3 billion pesos yesterday. Offshore investors still selling, the seventh straight day of net foreign selling. We've lost around 551 million pesos worth of net outflows. But what drove most of Monday's trading was the news on the second line telco players. So I'm just going to pull that out for you. Many investors flock towards Now Corporation. I'm just going to show that for you guys. Okay, it's up by close to 2% still, but yesterday it had reached a gain of 49.8% in just one day of trade. That's a 10-month high. Volumes were 12 times the 3-month full day average. That's after it said they got authorities from the NTC to operate a nationwide mobile telco system. So not just limited to 3G technology, they can now extend it to 4G and 5G as well. Dito Telecom, which is of course the third telco player, seems to be paring back gains. That's down by 2.4%. But that comes after it was the second most actively traded stock yesterday, climbing 9.6% yesterday's session. I just want to take a quick peek here at how our sectors are doing. I had mentioned to take a quick peek at the banks. I'm just very curious at whether our banks are feeling this, pain as well as the rest. And you can see that in my screen here, financials down by 1.3%. Property as well, though, down by 1.5%. And this comes amid new comments from the central bank. Governor Diokno saying that the BSP may remain accommodative for at least 2 more years. He says they may maintain the low interest rate environment to provide support to the economy amid all of this COVID-19 uncertainty. So this was actually in a TV interview on ANC where Diokno says that still there's a lot of uncertainty in the air, and what they have done so far will be on the table in the next maybe 2 years. Now, this according to Nikki Mapa, who is of course an economist at ING. He says that this 2-year timeline that the BSP is posing also highlights the outlook for economic growth, with the BSP likely expecting the economy to be in need of stimulus all throughout next 2 years, and we may not be in for a quick recovery. Security Banks' Dan Rosses says it's prudent to assume a slow growth until a vaccine is going to be happening. Also on Monday, Ben Diokno mentioned that the central bank is ready to deploy unconventional tools, but that will be a one-off or whenever there is a need for it. I just want to take a peek on some specific stocks to be watching here. Let's take a quick check, Jess, on AGI. They have said that they will be buying back some shares in the market. That will be around 2.5 billion pesos worth of shares, quite a lot actually, which are listed. So they're just going to be buying that back from the local boards in the open market exchange here. They will be using shares, which they actually have, and they will book these shares as treasury shares. So again, investing in their company, possibly thinking that the share price is something undervalued right now. So it allocated 2.5 billion for the program. So far, it has bought back around 2 billion worth of shares. AGI's stock price down by 1.8%, Jess.
All right, Dan, apart from the buyback program, we've seen so much capex cuts across the board recently. But finally, we've got one firm saying that they are seeing signs of improvement. Tell us more about that.
Exactly. So this is finally some good news, and this comes from Wilton Depot. They said that second half operations, so we're now, of course, in the Burr months, Jess, and those so far in the third quarter have actually shown some signs of improvement there. They said that earnings are now rebounding since the lockdowns were eased, and they're optimistic this can actually be sustained for the rest of the year. He says, this is from their CEO, Lorraine Bello, Cinco Shan. Hopefully, there will be no closures that will affect the market. And get this, as early as June, sales were already reaching the pre-COVID levels. Third quarter numbers are good and encouraging. And even as the company is not necessarily downsizing, they're optimizing their labor for each store. So they're actually moving things around. Interestingly, they say that the stores in the NCR region are actually showing a weaker sales rebound than the provincial outlet. But that's of course also because we're in still a quarantine and there are looser restrictions in other areas. So after opening 4 stores this year, they will still be adding 2 more outlets to the end of 2020. This, of course, after they had posted a 23% decline in the revenues and as much as 64% slump in their net income in the first half of the year. So hopefully recovering there and possibly setting the stage for more recovery. So more markets later on in the broadcast, Jess. But one thing that investors are also on the lookout for here, not just in the Philippines but also across the region, signs of a recovery as Wilcon is showing. One think tank is quite bullish for a broader recovery. They see a quick bounce back, not just for us but for ASEAN. Tell us, what is Amro saying?
Well, this time around, Dan, they are likening it to the Nike swoosh, although that upward strike for them would really depend on each of the economy's economic response. According to AMRO, the ASEAN Plus 3 Macroeconomic Research Office, now the sustained waves of the pandemic have to be halted rather, or staved off, or else these countries should prepare for a protracted U or even W-shaped recovery, something, of course, that these countries do not want. Now, so exactly at this stage, where does the region stand as of now? Well, quarter and quarter, all economies in ASEAN, save for China and Indonesia, are in technical recession. Again, just to give our viewers an idea, AMRO basically covers the whole of ASEAN plus three of the major economies. That's Japan, Korea, and China. Now, zero in on their forecast here are projecting GDP for 46% for 2020. Recall that fell to 16.5% in the second quarter. They are expecting the coming quarters to be just as 0.5%. Quarter again, coming full year to a negative GDP of 7.6%. Now, also, if you try to take a look at their 2021 forecast here for the Philippines, you'd see our first quarter GDP at least a positive GDP of 5.1%. And lastly, by the fourth quarter, that's going to be at 5%. They are projecting GDP to come in at 6.65%.
Okay, Jess, so you're a bit choppy here, but anyway, the point being that they are hoping for this Nike swoosh sign, a lot of hope there. But will this mean that if this rebound does happen, we will be going back to pre-pandemic levels, or is that just a pipe dream?
Well, then it's what
Okay, let's check back on that story later on in the broadcast. But of course, Amro saying that these COVID crisis levels are unprecedented and the strong growth after the recession will be due to a low base effect. So again, better than expected and hoping for an even higher growth in the next years to come. And the crisis, according to Amro, has opened doors for more efficient ways of doing the economic activities. Meanwhile, let's check in on the headlines we're keeping our eyes on this Tuesday morning. The Cabinet Cluster on Climate Change Adaptation, Mitigation, and Disaster Risk Reduction is seeking over 150 billion pesos in funding. That's for next year's climate and risk resiliency programs. The DENR-led cluster said the requested budget is 30% higher than the 117 billion pesos allocated to the same program of this year. Undersecretary Annalisa Revuelta-Te said the proposed funding will help build sustainable and resilient communities that can rebound from the pandemic. She says the country needs programs that will strengthen the resilience and adaptive capacities of its communities. For 2021, the program will prioritize 14 climate-vulnerable provinces affected by the rising sea levels, extreme rainfall and heat, higher ocean temperatures, and a disrupted supply of natural resources. The provinces include Masbate, Sorsogon, Bukidnon, and North Cotabato, among others. The percentage of small businesses that remain closed during the lockdown dropped to 6% in August and September. That's according to a limited survey which was done by the Trade Department. The percentage of shuttered companies dropped from the 38% recorded. That's during the height of the lockdown in April and in May. The study had about 3,000 respondents representing micro, small, and medium sized enterprises nationwide. Trade Secretary Mon Lopez says the agency is hopeful that the reported recovery momentum will lead the country towards a full recovery by early next year. Meanwhile, it's still a tough road ahead for oil players, with the pandemic pushing global demand down to levels which we have not seen since 2013. The International Energy Agency warned a, quote, treacherous path ahead for the industry, with the oil demand growth taking further hits from a renewed rise in COVID-19 cases in many countries. Now, here in the country, authorities still urge the public to stay at home as much as possible. That's despite the easing of lockdown measures. Global demand is estimated at 91.7 million barrels per day, which is a return to 2013 levels. The demand for petroleum products may also drop this year by 8.4 million barrels per day. That's as a result of the pandemic. Oil companies are now hoping for a speedy recovery for the economy, saying any rebound on the part of the energy sector would be hinged on the people's confidence to spend. The International Energy Agency is projecting demand to grow by 5.5 million barrels per day next year. With that, it's all about resiliency now for oil firms, that's as major companies posted net losses this year. Businesses and organizations now more than ever take hold of a voluminous amount of data. The question is, are they handling it well? And are they making those data work for them, or is it all sort of counterproductive? Now, to share with us some key industry insights, we have with us Praveen Kumar. He's the General Manager for Asia Pacific over at ASG Technologies. Good morning, Praveen, and welcome to the broadcast.
Good morning, Dan. Thanks for having me.
Praveen, let's kick off with a very quick review of ASG and what you guys are doing, especially in this pandemic. When we're talking about data management, we're thinking about a myriad of information, how long, tedious processes here. How does an organization stop information management from being such a big stumbling block, particularly in this period where there's so much going on, there's so much data being used up, even as, companies start moving their offices and their employees to start working from home?
Yeah, so ASG has been in the business of managing and helping customers manage their data and information across landscapes, across different platforms over the period of years. And one of the key things that we've noticed in the past decade is the information landscape has broadened, and there has been a high volume of data that's added every day. As you rightly said, since the pandemic, most customers have tried to work remotely, and the businesses have to cater to enable and engage with them digitally. And one of the surveys that we've done last year in Philippines showed that more than 40% of businesses in the Philippines are not digitally ready. So they're digitally distraught, which basically meant that they had data which they could collect but could not use. And a lot of customers who actually had data with them because of the increased volume could not understand what data is right and what data is wrong. Just to give you an example, one of the banks in the ASEAN region had data about consumers which said that most of the customers they had before the year 2000 were actually born in the 1900s in Afghanistan. But that's not true.
Wow.
Because that's how data was entered when you data entry things into the system. Like the first year you get is 1900, and then you go and say the first country that comes up is Afghanistan. So they go and start data entering that. Now, when you start using that data for marketing, for sales, for engaging, you end up with a lot of wrong data. Same goes in Philippines, where people keep changing mobile numbers, have a lot of mobile numbers with them. So you have to track whether you have the right contact. Otherwise, someone's trying to reach X person, you reach Y, and then you're spending a lot of time engaging. So we help customers in trying to identify where data could be wrong, how does data come from location A to location B, how can you fix it, and at the same time help them build processes that can help themselves be digitally enabled.
Okay, Praveen, just here, basically you're pointing to bad data here. So question now is, how does that cost, how much does that cost a company, and how does a group actually avoid it? Because sometimes really the problem with burst of information, especially when it's a, how does an
Yes.
organization actually solve that?
Yep. So you were a little choppy. I'll repeat the question just in case I understood you right. You could correct me if I did understand you wrong. What you were saying is
Sure.
most organizations have a lot of bad data. How much does it impact them in terms of revenue and productivity? And if it does impact
Mhm.
them, how can it fix it? Is that the kind of question you asked?
Exactly, Praveen. Go ahead.
Yeah, perfect. So there was a Gartner survey done last year, which kind of said most organizations tend to lose about $10 million a year at the minimum, which could go right up to $100 million a year, depending on the size of the organization and what kind of data comes in and goes out. But the fact is, this calculation of how much does it cost the business depends on how much you use that data. So if you actually don't use data that you have collected, then the calculation of losses is fairly irrelevant. Many customers that we've noticed, except for financial institutions and maybe some manufacturing companies who have started going in the digital transformation journey, have a lot of data which they don't use. So the fact is, if you're not encashing the asset that you have, which is data, and I just heard the news article just before that oil has been dropping their prices and the volume of oil consumption is fairly low. Till last year we used to say data is the new oil. Now we don't no longer say data is the new oil because the value of data has not gone down; it's in fact gone up. So data is far more expensive than oil now. And the fact is, if data is more expensive than oil, you've got to use it. So what is an example of using wrong data and how much does it cost? As I give you the example of one bank having to see data which says most of my customers before 2000 were actually born in 1900s and born in Afghanistan. You have to clean that data. Now that data doesn't reside in one application, it resides in hundreds of them. So you have to go and clean each one of them and then do data mining and do market research and do targeted advertisement. So for example, if I, as a customer of a particular financial institution, I'm insured for 10 years and I'm not insured for the next 10, being it health, auto, or whatever medical, the supplier needs to know that this is the customer where I can go and sell A, B, and C. So the ability to identify that and the ability to do data mining and advertisement on that is fairly expensive if I have wrong data. And that's where bad data comes in. So if you look at impacts between 10 to 100 million, in fact, there was an IBM research that said you could be yearly losing about $1 trillion plus in terms of data costs for companies because of bad data. So if you go back and see and rejig, each customer and each vendor would try to portray their own numbers. The way to fix it is to kill the data bad quality at source. So if we can identify where data is coming from, and how can it be fixed, then you've actually killed that bad data moving into 20 different locations and then trying to fix them. The second thing is to put a process together which can track how data is flowing within the organization and also have a digital transformation system or an application which can help you in that journey, both of which ASG can help customers achieve.
Praveen, I'm gonna have to jump in here, and it's interesting that you're actually here today because of all of these issues going on in the banking sector, which you had mentioned earlier on, particularly with the FinCEN issue. And this is also an issue about data, right? Data which had been existing for decades, really, that has just come to the forefront of the news right now. So this is also a concern on data security. When we talk about data, how do you make sure that we're not violating any privacy norms here? There's proper data governance when it comes to compliance and security, without, of course, jeopardizing the security of banks, the security of data privacy of people.
Yep. So you've raised a very interesting question. So the problem of bad data is not something that's happened in this decade. The Enron scandal, if you go back to the Enron scandal, is all a fact of bad data. Or you go to the NASA issue before the Enron scandal in the 1990s, that was also bad data. So the bad data problem has existed for quite some time. Today, we have the methods to identify bad data and fix them. So coming back to the question that you raised in terms of banking issues that have been come to the fore yesterday, at least in the Philippines, and we'll restrict this communication to the Philippines for now. The Philippines Data Privacy Act that was introduced, I think, a couple of years back, does have penalties around how data is actually used, demonstrated, and shared across enterprises within the country or outside. There are penalties if you misuse them. So you could have imprisonments between 1 to 3 years. There are penalties of between 500,000 pesos to, I think, 2 million. I don't have the numbers right, but something around that, where enterprises have been told that these are the norms you need to follow. And if some customer says that my data is private, don't tend to reuse it. The European Union came with a very strong act of GDPR a couple of years back, which has very hefty penalties, which are directly related to the revenue of an organization, not necessarily to the volume of issues that you have. And it's not only about the organization itself. So if that organization, and you take a bank, for example, if a bank in Germany decides to subcontract its call center to Philippines, or its back office processing center to some company in Philippines or India, and that company leaks data, this bank is held responsible, or this financial entity is held responsible. So the GDPR Act goes not only about your responsibility as your entity, it goes to your subcontractors, your outsourcing entities, your partners, etc., where your data is getting
Right.
manipulated, shared, and reused. So yeah, this is a challenge in terms of what data is shared and how it can be shared and how it can be reused. But governments across the world are trying to bring together norms which define what data privacy is and how it can be enforced. Now, the issue is how enterprises can enforce those regulations and be compliant with them, which is where we bring in solutions which have data management, information management, tracking compliance, and enforcing them within the organization in identifying where such leakages could happen.
All right, Praveen. And that moving forward, and very quickly now, how does one make a
President Rodrigo
data-centric
Duterte
culture
lashed
across an
out at
organization?
critics of the
And
government's
how does it
COVID-19
go beyond
response
the walls
efforts
of an IT
during his public address last.
So data is not an IT asset. Data is a company's asset. And everybody, if they accept this particular information, then it becomes easy. As long as a company keeps trying to make data an
Alright, thanks
IT
for that,
problem,
Marcel. That was
you'll
Maricel
always
Halili
find that
reporting live from
solutions are
Mandaluyong.
related to IT
We'll be
infrastructure,
back with
data
more stories
centers,
after a quick break.
PCs,
Keep it here.
antivirus software, anti-malicious information management
during his
software.
public
As long as
role.
you start making data an
Alright,
asset,
so
and
there's
which
a
is where
reckoning date.
not only the GDPR but also the
outside the
Data
500
Privacy Act in
already.
Philippines
Some
says
choice
you need to
words
have a
for
chief data officer. What we've noticed is a lot of companies hire a chief data officer under a CIO. Now that again becomes an IT problem and not a company problem. So the day you decide that data is an asset for the company, which a lot of banks, a lot of insurance companies, and a lot of manufacturing entities globally have started enforcing within their organization, the CDO literally reports sometimes to the CEO or the COO in terms of handling the business, then it becomes an easier issue. I'll give you a case in point. So in banks, you fill a form which has a customer name, a date of birth, and something else. If I say that data is an IT problem, I can tell you there are 500 applications within a bank which will store customer name not as customer name. It'll store customer name, customer ID, login, blah, blah, blah. Now, IT will say, yes, it's all secure, it's all perfect. But someone in the business has to say that the customer name should not be more than 30 characters. It should have starting with capitals and end with this. It should have a first name and a last name. So this is not defined by IT. IT defines based on their applications. This is defined by the business. And customer name is one attribute or a critical data element for data. similarly for date of birth, similarly for income, blah, blah, blah. So the example of trying to make data an IT problem and then say, okay, what IT solutions can I have to fix it, is a very narrow-minded solution which will solve your IT issues, but not your organizational data landscape, which is where having an owner for data, which is from the business and encompassing the larger organization in terms of data management, becomes a lot more critical.
Thank you so much. Of course, as you mentioned, data is the new oil, so trying to find more ways to monetize on that asset. That was, of course, Praveen Kumar, General Manager for Asia Pacific at ASG Technologies. Thanks for joining us this morning.
Thanks, Dan and Jess. Thank you. Have a great
Okay, so quick check. Okay, quick check on the markets, guys. Before I let you go, I have a couple of stocks that I wanted to check in on. Take a look at my terminal here. Let's kick off with Macro Asia, as them and their partner, the Chinese firm partner that are bidding for the Sangli Airport, are actually have not filed their filing anew for the Sangli Airport. They're asking the Cavite government to give them more time to complete the final requirements for the $10 billion Sangli Point International Airport after they missed the deadline yet again. Take a look at MAC trading flat there at 4 pesos 75 centavos. So speaking of airports, I just have more information on that mega wide deal that we were watching very closely yesterday. That, of course, as they got the deal to do the Malolos Clark Railway here. And just to take a quick peek on how that's doing today, if that's extending those gains, they said that that project will have an estimated cost of 28 billion pesos. That's equivalent already to more than half of its current order book of 48 billion pesos. So they're actually looking to boost their construction segment, even as, of course, they reported a 21% slump in the revenues in the first half of the year. You can see mega wide trading upwards. That's up by 1% here. And this, of course, as the rest of the local boards, I just want to take a quick peek there at how our bourse is doing and whether we are still in the red. Unfortunately, that seems to be the case. I'm going to pull out the graph for you of our leaders and laggards here. You can see only two stocks here bucking that sell-off. That's Pure Gold up by 1.9% and BPI as well. But the rest, from Bloomberry to Mega World to Ayala Land to Alliance Global, which has bought back its shares, not feeling the love today as our index slides 1.06% to 5846.43 this morning. And that's the first look into the business day today, September 22, 2020. I'm Danie, Laurel.
Catch us again tomorrow at 10 a.m. I'm Jess Delos Santos. We are One News.